Hi guys, how's it going? It's John here at ArtiumPro. Uh, Today I just wanted to go over for beginners basic market structure. I know for a lot of new traders that when you first look at a chart, things can look very confusing. And when I first started myself, there was a few things that I wish I had have known at the very beginning of market structure to help me understand how the market is actually created, how the chart actually prints, and how it would help me to predict price moves. So I just wanted to go over that today, really. It's all relevant to smart money concepts, and for me, it's the building blocks of reading market structure. And market structure is price action. So you might hear me refer to market structure as price action throughout the video. So let's just jump in, and I'll go over exactly what I want to discuss today. So the first thing that we're going to cover is candlesticks. Okay, and the topics that we're going to cover with the candlesticks are: what is a candlestick? There's a lot of people look at the markets, and when they see, all the candlesticks together, they think that that is market structure. So I want to go into what the candlestick is and its anatomy. What makes a candlestick, and what it looks like. The candlestick range as well. This is an important one for me to share, because this is going to help you see where price is actually trading. And then I'm just going to touch on candlestick formations, but I'm not going to go into it today. I'm going to do separate videos on each formation that I use to run with smart money concepts and go into depth with them. So what is a candlestick? So basically, a candlestick is a charting instrument that measures and prints price fluctuations within a specific space of time. This candlestick here, there is other tools available for traders to measure price fluctuations. You've got bar charts, line charts, Renko charts. You will see them on your trading view. But smart money traders use the actual candlestick, the Japanese candlestick, and these are price action and market structure themselves. They're the building blocks for the overall market structure. So it's crucial that you understand how they work. It's like going to France. If say you were to go to France and you were to go and live there, and you only spoke English, you're not going to understand what the people are talking about. So you've got to understand the language of the market the same way as you would need to understand the language of a country that you go and visit if you were going to live there. Okay, so it's the exact same thing. It is the language that we want to learn to help us predict price moves. And as I said in the last point, they provide the accurate data within multiple time frames. So we'll go into multiple time frames and show how they will help us predict price moves. Okay, so this is the candlestick anatomy, and this is showing a bullish candle. So the bullish candle we've got highlighted in green here, and what you have with the bullish candle is you have an open price, and price may trade lower within, say this is a 5 minute, I say this is a 15-minute candle. Okay, on the 15-minute time frame, what you'll have is your open price may have traded lower but rejected this area and traded higher, but what you're left with is a wick, and the wick represents the low of where that price traded within that space of time. Okay, so price clearly rejected, traded higher, and then before the candle closed, like it could have been like 4 minutes, we did trade lower again, but it still represents the high of where price traded to in that space of time. And then we had our closing price, okay? And then what would happen is the next candle would print. So wherever the close price is the open price of the next candle, okay? And the same goes for the bearish candle, only it's inverted. So what you have is, you have your open price, price may have traded slightly higher and then started to trade lower, but the wick here, you'll hear people say, call them shadows sometimes, but the wick will represent where price traded to and left the high, but rejected. And now, because we're running below the open price, this is the overall body here. We run further down, created the low, and then coming close to the expiry of the candle, we possibly traded higher and closed just above. Okay, so that's the candlestick anatomy, and all these candlesticks, like these two candlesticks, are identical, but we've got many different forms of candlestick that is important to understand, which we'll go into depth in other videos as well. We'll move on to the next slide. And what I want to talk about is the candlestick range. So we just went over the candlestick anatomy, and I want to talk about the candlestick range. So what we're talking about is where the high and the low of the candle is on a certain time frame. And this is where I want to talk about multiple time frame analysis. Okay, so I'm just going to switch over to the chart. Okay, and what we have here, this is the Euro Aussie dollar, and we want to be looking at the monthly. We want to start at the highest time frame. So this is your monthly chart. You've got all your chart, all your time frame tabs up here in the top left. So we want to start with the monthly chart on the higher time frame. When I'm working with ranges, I don't really want to be going any lower than the daily. Okay, so we'll cover the 3, and you'll start to get an idea of how we start working within ranges and breaking price down. So, and we're just using the candlestick, okay? So what we have here, I'll actually put this on to replay because I'll show the previous month, not the current month. Let me see, replay, and we'll cut that back to the, oh, cut that back. Right, so what we have here is, we've got this candle here, okay? Doesn't look like the candle we showed on the anatomy, but it's still got the wicks. You've got your open price, which is the low. It traded lower, and then it traded higher, rejected, came back down, and it closed above. So that's why it's green. Because even though it traded higher and lower, and it looks like an indecision in price, it still closed higher. But we want to only look at the high and the low. Okay. This is how you would start to break down your price. Okay. So you got monthly high. Got monthly low. Okay. So now we want to just break down into the weekly. And what you'll have is, within the week, you'll have these candles here. So each one of these candles represents 1 week. Okay. And what we can see here is we can actually start seeing the price action that occurred within this range. Okay. And what we can see is it's kind of middle of the range here where a lot of the trading has been happening. So that is why on the monthly that it looks like there's an indecision here. Okay. And what we want to do is, so we still want to be trading like looking for setups. So we've got the next candles that are the weekly. So these are the weekly candles, and we just do the same again. Let me just close that down a wee bit so it's a bit more visible. So we want to be looking at, I'm going to look at this candle here. A lot of indecision candles in this here, but we'll break it down. So that's the weekly high. Oh, what have I done? Weekly high. Weekly low. Okay. So we know that we're within the monthly range, and now we're looking to determine the weekly range. Okay. So once we break this down, let me remove that candle there too. We'll just keep taking it one candle back at a time. Let's go down into the daily, and we're breaking price down. This is how you break price down. Okay. So now you've got 5 daily candles within a week. So this would be your starting candle here. This one. So that's the start of the week there. So you got 1, 2, 3, 4, 5. And what we can see is, we can see price created a range here and then started trading lower. Okay. And this is basically how we break everything down. I think this is a good example to show you, because it can actually break down the price action for you and make it a lot easier to read. Okay, and that's ultimately what we want to do. We don't want to make price complicated. We want to make it easy. So you want to be working with the candlestick ranges, and that'll help you determine your bias and what direction price may possibly go in. Okay, so that's the ranges. I'll just go back in again, and we'll move on. Okay. Let me see where we're at. Let's go back. Right. Okay. So candlestick formations. Now I'm just going to touch on these, and I'm going to go in depth more on separate videos for each candlestick formation, so that everybody gets an understanding of what they are. But I'm going to highlight five candlestick formations that I use with smart money. There is a lot of different formations, but these are the 5 most powerful ones that I find help me with my trading. Okay, let's go on. So we've got the morning star, evening star, engulfing candles, doji candle, and outside candle. Okay, so the first one is the morning star, and it's a 3 candlestick formation, and I'll go into more detail, but we use these to determine swing points within the market and possible reversals. The evening star, that's the same, similar to the morning star, only it's inverted. So in this case here, it would be a swing point that we would be looking for to trade lower. Okay, we'd be looking this, you know, when markets are trending higher, and we'd be looking for them on the higher time frame. Engulfing candles. Okay, this is to show signals of you know, buying or selling power. That's actually that's the wrong color. That should be green. So don't pay attention to that. We'll go into detail on in another video. But yeah, these are to highlight buying and selling power. Okay, and I'll go over it again. The doji candle. So these are basically indecision candles. Okay, but you can tell a lot in the market just by the formation of these candles. And you've actually, within the doji candle, you've got your normal doji, which is standard indecision, where the wicks are generally the same length and price traded to the same level in the middle, okay? And then you've got what's called the gravestone doji, where price traded higher and rejected and closed at the low. And then you got the dragonfly doji, which traded lower and then rejected and traded back up and closed near the high. Okay, so that's another formation that we'll look at. And then the outside candle, you're going to see these on the ArtiumPro indicator, and these candles are very powerful. They can show like where buyers and sellers have been trapped, and then it shows the banks whenever they're ready to push price in a certain direction, they sweep, they take out all the orders within a certain area. Okay, and you know, we use these here to try and predict price moves. So I'll go over these in detail on a further video, and you know, you'll have a better understanding of what they actually mean. Okay, so that's basically it, guys. Any questions at all about the topics, you know, in the session, just reach out to either myself. There's also another educator, Peter. You've got Sam and Ryan as well. Okay. I hope you found this video helpful, and you know, like I say, any questions at all, you know, feel free to reach out to us in the Discord, and we're happy to help you in any way we can. Okay, so I'll see you again in another video, and look forward to hearing from you. Cheers now. Bye bye.